Hello and welcome. You're watching Buy Now Sell Now with me, Soumit Sarkar, and my co-anchor and colleague Anisha Jain. So Anisha, if you look at the markets, the Nifty benchmark is down around 80 odd points, but the pain seems to be much more when it comes to the broader market. Nifty mid cap is down around 1.5%, while the small cap index is down around 2.5%, right?
Yeah, broader markets under pressure, but what's clearly outperforming is the banking index. That index is up a good 400 points as we speak. So it's a material outperformance that we are seeing from Bank Nifty. And over the last couple of days, we have seen that there has been at least a shade of outperformance, if you must, from the Bank Nifty. Of course, there's this entire pressure which is building up on the NBFC sector. And there is a part of the street which expects that banks are better placed versus the NBFCs. And that's why you're seeing a bit of an outperformance. Case in point being Bajaj Finance. That stock was down 4% yesterday. That continues to be under pressure today as well. There's a cut of almost 1.5% on that stock. Separately, we're watching out for other sectors as well and other segments of the market. On the losing side, IFL Finance for second day on the trot is in lower circuit, so a 20% downtick coming in. 2 days consecutively, that stock has been in lower circuit. You also have JM Financials, wherein RBI has come in with a heavy hand on that one as well. That stock down 16%. Mahanagar Gas is the other one on our radar right now. Citi has actually downgraded the counter to a sell versus underperform earlier, if I have it right. No, so from a buy, they have come in all the way to a sell. The target price too has been cut. They're concerned by the recent statements of the oil minister saying that the companies are not fully passing on the benefits of the gas reforms to the customers. So that's clearly weighing heavy on Mahanagar Gas as well as Indraprastha Gas and the other gas distribution companies. They are in focus on account of that. Take a look at Aditya Birla Capital, down 8%. Manappuram, after that solid run yesterday, is coming under pressure today. Even L&T Finance Holding and India Bulls Real Estate, wherein there was this news about vacating some of the land plots which is needed in Maharashtra under the SEC regulation, is all coming under pressure. But the broader markets, that is where the vibrancy is. Individual names like Natco Pharma, Linde India, Alok Industries, Jio Financial Services, and then the banking names, as I pointed out. So Kotak Bank and Axis Bank, these are the big outliers, Soumit, in the trading session. So while, of course, the headline index continues to consolidate and continues to do the sideways move, there are individual names that deserve mention.
Well, as you were mentioning about the NBFCs, like IFL Finance is down around 20 odd % for the second straight trading sessions. JM Financial, after the RBI ban on loan against share, is down around 16 odd %. So the NBFC sector, if you see, has been under pressure. It's L&T Finance also, which is down around 9 odd % yesterday. Bajaj Finance was declining around 4 odd %. So what has been the new regulations or the new restrictions that RBI has been putting on NBFCs? And we have Snehi joining us to give us entire detail on what has been the recent restrictions that RBI has put on multiple NBFCs and how does that look like and what has been the restrictions in fact.
Well, yes, Amit, absolutely. Let's take a look at the RBI regulations that have been coming in for quite some time now, and RBI has been cracking the whip on a number of banks as well as NBFCs, but it has become more active in doing so since 2022. So let me take you through what the RBI has been doing since then. And Paytm Payments Bank is the first big one that is making it to the list, because on 11th March 2022, for the first time, RBI had prevented Paytm Payment Bank from onboarding any new customers, and this was on the back of material supervisory concerns that were being observed in the bank. Followed by that, the next one to come under scrutiny was M&M Finance on the 22nd of September 2022, and the RBI had prohibited recovery or repossession activity through outsourcing arrangements for M&M Finance, and this also on the back of certain material supervisory concerns that it had observed, especially when it came to its outsourcing activities. Now moving on, the next company under the radar of RBI was Bajaj Finance, because on 15 November 2023, RBI had prohibited Bajaj Finance from sanctioning and disbursal of loans under two of its lending products, Ecom and Insta EMI card, and this was done because Bajaj Finance was not adhering to the extent of provisions of digital lending guidelines by the RBI. There was no issuance of key fact statements to the borrowers, and there were also certain deficiencies that were seen in the key fact statements of digital loans. And well, the next big one that came was Paytm Payments Bank again, because on Jan 31st of this year, a whole host of regulatory sleuths came in from the RBI. They said that no further deposit or credit transactions or top-ups could take place in customer accounts, prepaid instruments, wallets, FASTags, and nodal accounts of 197 communications also had to be shifted out of Paytm Payments Bank. And this was on the back of non-compliance that Paytm Payments Bank had shown with respect to that 11th March notice of the previous year. Now, the latest one that came in on 4th of March was IFL Finance. We have been talking about this over the last few days, and the order was to seize and resist sanctioning and disbursing gold loans or assigning or securitizing, mainly anything to do with operations when it came to the gold loans portfolio. And well, there were a lot of reasons for this. It was also thought of that there were deviations in assaying and certifying the purity of gold, the weight of gold, the procedure of the auction that the company was following, the mismatch in the difference of the auction amount that was coming up, and the non-adherence to standard auction procedure, and also the charges that were being levied to its customers. And well, the most recent one that came in yesterday was on JM Financial Products. Now, RBI has cracked the whip on this NBFC as well. They're saying that any form of financing against shares or debentures, including the sanction and dispersal of loans against IPO of shares and a subscription to debentures, has to be stopped by the company. Now, loan against securities makes up 8.6% of JM Financial's portfolio, and this has also come in on the back of regulatory infringements that are being done by JM Financial. Company has repeatedly helped a group of its customers bid for various IPO and NCD offerings by using loaned funds. This is what the RBI believes, and credit underwriting has been found to be perfunctory. Financing has been done against a very thin level of margins, so mega margins coming over there as well. And the application for subscription of demat accounts, bank accounts, and all of them were being done via a power of attorney without a master agreement, and the customers had no idea about this, and they had no say in all of this as well. So by chance, the company was able to act as a lender and a borrower as well, and there were also some serious concerns on the governance issues within the company. So while a whole host of regulatory concerns coming in from RBI on all of these NBFCs, majorly since 2022.
Okay, so that was a comprehensive take of what all has been happening and how RBI has been coming in with that regulatory hand on the entire NBFC sector as a whole. But today, of course, there are a couple of brokerages as well. Morgan Stanley as well as Goldman Sachs wrote on the matter. Goldman believes that banks are better placed than the NBFCs given all of this, while Morgan Stanley believes it's not the best to probably paint the entire sector with the same brush. So they do have their thoughts around individual names. But keeping it with IFL Finance then, and this one is a big exclusive that we have for you on ET Now. The management of IFL Finance, and we have them right here in the studios earlier today. Mr. A.K. Purwar, the Chairman and Independent Director at IFL Finance, joined us in the studio, and he said that IFL Finance will look at complying with most, if not all, of the RBI regulations and requests that they've made by 31st March. Listen into that bite, and then we'll continue the discussion with our guests as well.
If RBI, our regulator, wants the business to move in a certain way, then we would follow RBI instructions. And we am sure and we expect that RBI will ensure that each and every player of the industry follows same, and it becomes a level playing field. We have decided that whatever RBI desires in terms of compliance of regulations, as a company, as a business unit, we will see to it that by 31st March, all, if not most of it, gets complied with. And we are continuously going to engage with RBI to apprise them from time to time on a regular basis as to what kind of remedial action has already taken place and what is going to take. Very clear and very sure that we would see to it within the company that all these issues which have been flagged by RBI are comprehensively addressed by us by 31st March. The damage will definitely be there because almost 30% of our businesses now we are stopping not doing. So damage will be there, but I expect this damage to be temporary. I expect that, well, we are making efforts to come back on rails as fast and as quickly as possible. I expect that maybe 2 months, maybe 3 months, we are able to convince RBI if they can, if they are comfortable with whatever remedial action we have taken, and they carry out a special audit as early and as quickly as possible, then we should be come back on rails very fast.
Right.
But our IT advantage would ensure that the high growth trajectory which our company has followed so far would not be allowed to go away. If we come back on rails quickly, there would be any negative fall by March 25. We will continue to maintain the present market share, hopefully. by
Okay,
March
that's
25.
interesting.
Well, the NBFC sector, now what to do about it? Let's pose this question to our market guest and market experts today. Kunal Bothra we have in the studio, and Rajesh Agarwal, the head of research of AUM Capital. Rajesh, firstly my question to you, for IFL Finance specifically, now though the management, the board is confident that they will resolve the issue quite in some time, but the street does not expect so. The stock has hit 20% lower circuit for the second consecutive day. What is your view here when it comes to IFL Finance?
Good morning, Sumitra. Good morning, Anisha. Good morning, Kunal. There has been a lot of apprehension in the recent past. It started with Paytm, then IFL, yesterday it was JM Finance. One should not forget that NBFC as a sector has become an integral part of the economic growth, if I would say, because banks cannot reach everywhere. Banks are not able to sanction loans or take deposits from sanction loans to unsecured or smaller ticket size customers. So a role of NBFCs would always be there. Yes, RBI has found some discrepancy, and attending to those problems would be a best thing to be for everybody, be it the NBFC company as such, be it the investors like us, or the market investors, or even the client. So whatever is being done by RBI is a very prudent step, and I believe that these companies will take remedial measures, and in the course of time, maybe 1 quarter or 2 quarter down the line, things would be put in place. So yes, I believe that there would be problems, there would be cut in market cap or market share, or even their loan book for some time being, for 1 or 2 quarters, but in the longer term, things would be in place. And this kind of opportunity, this kind of scenario is giving a long-term to medium to long-term investors a good opportunity to invest. And one should, I would say, that you should not take the entire sector as being discrepant or something like that. We should not take everybody in the same picture, I would say. One should take case by case basis. Maybe in the larger cap space, we would like to recommend Bajaj Finserv, or in the mid cap space, Poonawalla Finance or Geo Financial. They can be taken as medium to long term bet, and any adverse news in these counters for any whatsoever reason, for the sector, of course, I won't say in these counters, but for the sector, of course, gives an opportunity to accumulate these sort of counters.
Can't paint everything with the same brush, but the overhang is something that might just stay on the entire sector. But within NBFCs, would it be a good strategy perhaps to bottom fish on some of the names? Kunal, any view?
Well, I think except for Bajaj Finance, I doubt that most of the other stocks are actually very close to their oversold nature in terms of indicators or any kind of a major bottom for themselves. So the only good part about Bajaj Finance is that the indicators, the RSI, etc., have entered into the oversold territory. The stock is more than 10% divergent now from its 200-day moving average. So both of these parameters could augur very well for the stock over the near term. At least what we may expect is that the stock may get into a bit of a stability, and that sharp price correction which you've seen since yesterday and specifically over the last 1 month for stocks like Bajaj Finance, I think that could get arrested. So that's the only stock which I believe could now be looked as more of a contra buy from current levels.
Well, that was the NBFC sector for you viewers. And with that, let's slip into a short break and we'll address and start our investor queries post that.
Hello and welcome. You have tuned into Buy Now Sell Now on ET Now, and this is the show where we get you answers for all your stock-related queries. And viewers, on the show today, we have been joined by Kunal Bothra as well as Rajesh to guide you better. And this is a small caveat that you can send us your queries live on a WhatsApp number that is flashing on the top of a screen, or you can also write to us on our social media pages of X as well as Facebook handles. But with this, let's move on and let's kickstart taking all your queries there. And so many queries have already started trickling in, and today I'm taking the first query from Bishaka. Hi Rajesh, good morning. The first query of Bishaka is on Tata Steel. He's holding 600 shares from a price of 113 rupees. Good time to book out profits in this one, or should he continue to hold on?
Good morning, Srishti. I think if he's a long-term investor, by long-term I mean if she's willing to stay put for maybe 12 to 18 months, no point in booking profit because it's a long way to go. The numbers were good. Companies focus on reducing debt, the kind of infrastructure boom and all those things which we are hoping to happen in the next financial year or 2-3 years down the line would be a great great thing for companies like Tata Steel, which are into steel and cement, these kind of companies, right? So unless you are into a hurry to book profit just because need of funds or your time horizon is short, I think one should stay put. And if it falls to maybe 135 levels, one can even add.
The next query is from Munira Julu Chittur from Andhra Pradesh, and she wants to know whether is it a good time to entry Birla Soft, AGI Greenpack, SMS Pharma and Precall for long term. What would be your view here?
It's for me.
Yeah, yes, Rajesh, it's for you.
I think AGI Greenpack is a better of the lot, which the name of the names which you have said, even Birla Corp is good. These two companies can be bought for a longer term. President Birla Corp is doing very well. They have gone for expansion and all. Even in AGI Greenpack, you find all those packaging stories going forward. So I think these two companies, despite the fact that AGI Greenpack has run up quite a lot in the last 1 year or so, still I think that if it's bought around 780, 800 odd levels, one can easily see 20-25% return in the next 1 year.
All right, moving on to the next query then, and this one is on BLS Internationals. Kunal, can you check this one on charts? Prashant has bought 100 shares from a price of 393 rupees. Can he go ahead and average this particular counter or move out on this one? He wants a short-term view.
So I think short-term wise, the stock seems to have broken down from its major support. I think 359.60 was the previous major swing support for the stock on closing basis. That's broken down for the stock. It's now back to the 345 mark. I would believe that if in case the stock doesn't recover back again quickly towards this 359, 360 levels, then the fall may exaggerate a bit more for the stock. So I think it could be a good time where you'll be able to exit. And only about 360 levels in case if the stock sustains for few trading sessions. That could also coincide more or less with the 50-day moving average. That could be a point where we may look to re-enter.
The next query is from Hitesh and Kunal. He wants to know your view for three stocks: Rajesh Exports, Paytm and Timex.
Well, I think Rajesh Expo and Paytm, both of them are trending lower. In fact, both of these stocks are reeling significantly below their long-term moving averages and since quite some time. So I think it's best to try and avoid these names at current levels rather than buy or accumulate, hoping that these stocks would get into any kind of a major turnaround.
All right, taking the next query then, and Rajesh, this one is on JP Power as well as JP Associates. A viewer named Parish, who is writing to us apparently for the first time, wants to know the view on these. Can he go ahead and buy any of these at current market price? What will be your view?
See, for investment, these are strictly avoid counters. Both of them, I would say, the numbers have been pretty bad. A whole lot of debt and all those issues which are their legacy issues, I would say, from a long period of time. So it's just because the markets are moving up, small cap, mid cap, without any fundamentals are moving up. So I don't think this is the prudent idea to do investments in these kind of companies. I would say the kind of correction market is giving many good mid cap stocks have corrected by 10-20%. Focus on them. avoid these kind of companies where there are no fundamentals to talk about.
The next query is coming in from Sitharaman Ganesh from Chennai, and it's for you, Kunal. He wants to know the support level for Dr. Reddy, and is it a good time to add?
Well, may not be a best time to add the stock because it's it's gone through two phases of price trends. A rally for itself from I think 5,600 level, very recent rally towards 6,400, 500 mark. Then it went through a phase of a pause or a consolidation which lasted for almost 2 to 3 weeks for Dr. Reddy, and it's now giving the signs of a breakdown of sorts on the swing chart. So which means that the stock could probably now get into a leg of correction, and even if it's a 50% retracement correction, then the stock may actually come back towards 6,000 mark. So better level to buy the stock should be sub the 6,000 levels.
All right, taking the next query then, and this query that I have is coming in on Yes Bank. And Kunal, Santosh has bought Yes Bank from a price of 28 rupees 65 paisa. Now at a loss, will that be a hold or sell?
Well, I think again, I think even for this stock, the major support levels have been broken. The 50 DMA, which was a key support point for Yes Bank, over the last I think 4 to 5 months, the stock used to have this tendency of coming closer to the 50-day moving average and then bouncing off from those levels. That support has been broken. I think the level for 50 DMA for the stock in the very recent past was around the 25 mark. So I think if you can probably wait for a mild bounce and closer to 25 levels, could be a good point where we look to exit.
Okay. The next query is coming in from Shrinu from Vijayawada, and he has bought Greaves Cotton around 300 shares at a price of around 162. Rajesh, should he continue to hold and add more at current price?
One should continue to a very good story. They have good ancillary business. The EV section in which they are working is doing very well with new orders coming in. I think this is a kind of stock where one should wait for an opportunity to enter if it falls for some reason or other. But for longer term horizon, somebody holding one should continue to hold.
All right, Rajesh, once again coming to you because this query is on Sasta Sundar Ventures. A viewer named Sri Krishna is holding 20 shares from a price of 400 rupees. Can he go ahead and average this particular stock at this point in time?
No, I don't think averaging would be a great idea into this. Rather, I would say the valuations are stretched, but even at these levels, I would say. So any upside should be taken as an opportunity to exit. If you want to invest, there are a lot of ample opportunities. Like we spoke sometimes back about Geo Financial or Poonawalla in the NBFC space, or IRCTC, even in a healthcare center where there are negative news have been there from last week and the stocks have fallen, like Narayan Dalai or Medanta would be a better bet than what Sasta Sundar is.
Well, the next query is from Vivek and it's for you, Kunal. It's on 3 stocks. JBM Auto, he has bought at a price of 859. Sangvi Movers at a price of 350. NBCC at a price of 75. He's asking whether should he average or exit these 3 counters.
I think it could be a good time where we may look to book out profits into maybe all 3 of them, because I think for example JBM Auto, the stock is now going through a phase of correction and it's now confirming a break below its previous support. So I think the previous support for the stock was around 1990, 1995 odd mark. It's trading below those levels. So it's a good time where you may look to book profits over here. Sangvi Movers on the other hand is trying to retest its 50-day moving average. So in case of the stock doesn't hold on to this 50 DMA, there could be a stronger prospect of a further correction into the stock price. So that could be a good candidate of a book profit at current levels in the anticipation that the stock may break below its 50-day moving average. And even for NBCC, I think the stock has already gone through a sharp correction from 175 to now 125, 127 thereabouts for NBCC. The previous support for the stock is 120, which was hit I think the first week of February when the stock had seen a sharp correction. I think those levels could be retested over the very near term. So would suggest to book profits into all 3 of the names.
Alright, so that's the view coming in on all of these stocks. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now. The first query coming in now is from LRG Reddy and it's from Telangana. he has purchased Tilak Nagar Industries at a price of 249 and Talbros Auto at a price of 282. Currently, he's sitting on a loss. Kunal, he wants to know whether should he continue to hold these counters or just exit right now.
See, Tilaknagar Industries, I think, is down below its 200 moving average. Talbros, on the other hand, is down below its 50 EMA, and is the trends for the stock in the last 3 months or so has been negative for Talbros as well. So I would believe that both these stocks are trending lower, showing signs of weakness. Doesn't make sense to hold on to these names. I would suggest an exit.
All right, moving on to the next query that I have, and this one is coming in on Suson. And Rajesh, Dr. Uday Singh, who is a senior citizen from Hyderabad, is holding 5,000 shares of Suson from a price of 37 rupees, and he's been holding the stock for the past 6 months. What's your opinion on this particular stock? He's still at mild profits in this one, so should he go ahead and move out?
See, as far as Suson is concerned, it's not of a stock with great fundamentals, but still in the recent past, things have started changing. The order book has gone up, the capacity has gone up, they have reduced debt with a great margin. Even they have raised money, I think the further debt reduction has been done. So I think it's one can continue to hold, but it's a high risk bet. One can continue to hold for maybe 42, 45 odd levels in the next 6 to 7 months. What I would suggest is keep your buying price as a stop loss so that you don't come into a loss, because these kind of companies are quite risky. You can continue to hold up to 45 rupees, but keep your buying price as a stop loss.
All right, taking the next query, and this one is from Parvinder Singh. And Kunal, give your view on Naveen Fluorine. He's holding 22 shares from a price of 3,800 rupees. It's been over a year that he's been holding the stock. So can he go ahead and continue holding this for the next 6 months? Any hopes on recovery or profits?
I would believe that doesn't look attractive on the charts. It's been trading with consistent weakness. So the last time the stock was below the 200 DMA was in September 2023, and the stock was almost at 4,500. Right now the stock is at 3,000 levels, and it's still reeling below its long-term moving averages. So it's purely a trade based on hope for a stock like Naveen Fluorine. I would suggest to exit the stock into every minor rally you get into, unless the stock breaks past above the 200 DMA, which is now currently at 3,900 levels for the stock price. So maybe closer to 3,800, 3,900 only could be a better point to try and re-enter the stock price, because in these kind of trends it's very difficult to try and fathom that when would the correction end. So both in terms of time as well as price wise, the correction would keep on continuing for the stock unless it breaks past above the key psychological resistance. In this case it's 3,900 for Naveen Fluorine.
The next query is from Vidya from Bangalore. She has around 112 shares of Tata Chemical bought at an average price of 947. Rajesh, she wants to know whether should she continue to hold this counter or exit this and invest in Tata Steel now?
No, of course, Tata Steel is a good bet, no doubt on that. But for Tata Chemicals also is a very good bet, and rather I would say it has not performed in the recent past, and this kind of consolidation taking place in this counter is giving a very good opportunity to long-term investor to invest. The chemicals industry as a sector is showing turnaround. The balance sheet is very strong. They are holding in their group companies that again has some value. So I think a target of 1,250, 1,300 odd levels is quite possible in the next 12 months. So somebody, even somebody looking for putting new money in Tata Chemicals is the best bet.
All right, Kunal, the next query is from TP Vinod, and he's been writing to us almost daily to know about Saxoft. Your view on buying Saxoft, how it is looking on this short and the long-term charts, and any targets as well.
Well, again, not an attractive chart. The stock has not yet entered into the oversold territory on the weekly time frame. In fact, the concern now for the stock is, for the first time, I think in the last 2 years, 2022 made from there, the indicators have now started to get into a bearish territory for the stock price on the weekly time frame. So that means that the stock could be at the brunt of some further selling pressure over the medium to long term. So I would suggest to avoid the stock, not to buy unless there is a credible sign of a bottom formation for the stock, which could be some time away.
Thank you, Kunal, for that. With that, let's slip into a short break and we'll address more investor queries post that.
welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries. And the next query that I have, Kunal, is coming in on About India. Actually, let me take it from the advice from Rajesh actually, because this query is coming in from Suresh from Bharuch, where he's looking to buy fresh in About India. And Rajesh, at this point in time, can you advise him for the long term that whether he can go ahead and make a fresh bet in About India? How are the fundamentals looking for this one?
The very strong fundamentals, I would say. The balance sheet is very strong, clean balance sheet, company doing very well, order book good. Everything goes in favor of this stock. The only thing is liquidity. There is no liquidity in this counter. But since he is a long-term investor, I don't think liquidity will be a matter of concern. Yes, of course, one can go ahead and buy.
The next query is coming in from Arun Kumar, and it's for you, Kunal. He has around 40 shares of Inox India, Azad Engineering and Dream Folks. Should he buy more or sell these counters?
So, I think Dream Folks is something which you can exit. The stock has been just about hovering around the 500 levels, plus or minus 10% band for itself over the near term. No major trends for the stock on the short to medium term chart. So that's a stock which you can clearly avoid or exit. Inox India has been going through a very strong uptrend. Limited chart history, but I think looks attractive. So you can continue to hold on to that. As well as I think Azad Engineering is the third stock which you mentioned. That is also a hold. Limited history, but again has done quite well for itself.
All right, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first query to you, Rajesh. Vinod wants to know the take on L&T Finance. He's holding 500 shares from a price of 76 rupees. Though he's a long-term investor, what will be your advice?
Switch to Geo Finance.
Well, the next query is from Srinivasan from Chennai, and it's on data patterns. He has 15 shares. Kunal, should he continue to add more or hold this counter?
I think you should look to hold on.
All right, the next query is on Tata Chemicals. Kunal, what will be your view on this one? A viewer named Partha is holding 100 shares at a price of 965 rupees. Should he go ahead and exit this one?
Continue to hold on if you're a short-term trader. Look out for targets of 1130 to 1140 over the next couple of weeks.
Next query is from Rima from Pune, and it's on NetWeb Technologies. She's asking whether it's the right time to enter this counter post the recent rally that we have seen. Rajesh, what would be your view here?
Avoid at this point of time, wait for correction.
Okay, Rajesh, among South India Bank, Zomato, Moil and NCC, any stock that you like for a fresh investment, for a long-term investment at this point? This query is from Chandrakala.
Out of these four, Moil is a better bet, I would say, and the second one would be South Indian Bank.
The next query is from Shivanshu from Delhi, and it's on Zomato. He has bought at a price of 130. Kunal, should he add more this counter or sell right now?
Just hold on to the stock.
Okay, Kunal, Swati wants to know a view on Zen Technologies. She's holding 75 shares from a price of 807 rupees. She actually wants a long-term view in this one.
Well, I would suggest just hold on to the stock in case if it dips down back again to that 800 levels. Good time to add further.
Next query is from Rajesh, and it's on CMS Infosystem. He has bought at a price of 387. Nalco bought at a price of 157. He can hold both the counters from 1 year perspective. Rajesh, what's your view here?
Nalco is a good hold. CMS try to book profit.
Okay, Kunal, what will be your view on Adani Wilmar? Sunny is holding the shares from a price of 373 rupees. Wants a view for the next 2 to 3 months.
Hold on to the stock as of now. Keep a trailing stop loss of 330.35 if you're a medium-term investor.
All right, but with this, viewers, we are completely out of time in this edition of Buy Now Sell Now. Thank you so much, Rajesh and Kunal, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Soumit and the entire team who put this show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.